Okay, let's get right into it. Grab's latest earnings report was a big deal. We're not just talking about growth anymore. We're talking about an acceleration that's firing on all cylinders. We're going to break down exactly how Grab's core flywheel is spinning faster, how its new high-margin businesses are about to turbocharge profits, and what it all means for the stock. The numbers here are seriously impressive. At the very heart of Grab's whole strategy is this idea of an ecosystem flywheel. And look, you don't have to just take their word for it. The headline numbers really tell the story here, and it's a story of accelerating momentum. So let's start with the big one, on-demand gross merchandise value, or GMV. This is basically the total value of everything sold on the platform, and it's the number you really want to watch for the health of the core business. This quarter, GMV growth actually sped up to 21% year over year, hitting a massive $5.4 billion. That's not just steady growth, that's proof the engine is revving faster. And that GMV growth, it flows directly to the top line. Revenue jumped 23% year over year to $819 million, which, by the way, smashed past what analysts were expecting. This is exactly the kind of powerful top-line expansion that gets investors to sit up and pay attention. But here's the real kicker. This isn't just empty calorie growth. It's profitable. Adjusted EBITDA, a key profitability metric, hit a record $109 million. That's a huge 69% jump from last year, and it marks their 14th straight quarter of improvement. It shows Grab has cracked the code on how to scale this thing profitably, which is a massive milestone. So, the big question is, how did they pull this acceleration off? Well, it all starts with their core strategy in mobility and deliveries, which is all about reinvesting to make the service more affordable. And that, in turn, is driving a huge surge in transactions. Now, this is a really fascinating slide because it reveals a crucial insight. Look at the gap here. Transactions are growing way faster than the number of users. What does that tell you? It means existing customers are using the app more and more often. For an investor, that's a powerful sign of a deepening competitive moat. The more people rely on Grab, the harder it is for anyone else to steal them away. And this right here is that flywheel in action. It's a beautifully simple but incredibly powerful virtuous cycle. You make fares a little lower, which brings in more riders. More riders attract more drivers to the platform. More drivers mean wait times get shorter and the service gets better, which, you guessed it, pulls in even more users. This self-reinforcing loop is what's pushing Grab's user base to a new all-time high of over 46 million. And this flywheel effect isn't just for ride-hailing. Nope, Grab is running the exact same playbook in its deliveries business, and the results are just as impressive. By focusing on things like affordability and convenience, they've ignited 22% GMV growth in that segment. It proves the model works, and it's scalable. All right, let's move on, because this is where the story gets even more interesting. Beyond that core business, Grab is now rapidly scaling two high-margin profit multipliers. First up is advertising, and the numbers here are frankly staggering. Revenue grew an explosive 45% year over year, and it's now on track for an annualized run rate of $236 million. This is quickly becoming a really significant high-margin revenue stream. But why are so many merchants flocking to advertise on Grab? The answer is dead simple. It just works. Merchants are seeing an average return on their ad spend of over 9 times. I mean, that is an incredible ROI. It makes Grab's ad platform an absolute no-brainer for businesses. And for Grab, it's a beautiful, high-margin business that just bolts right on top of their existing ecosystem. The second high-margin engine is financial services. And this is where you can really start to see Grab's long-term vision taking shape. They're using their huge user base and all that data to build out a powerful lending business. And let me tell you, that loan book is scaling at a very impressive clip. Just look at these numbers. The loan portfolio has almost doubled in a single year, and they're on a clear path to cross that billion-dollar mark by the end of 2025. This kind of rapid expansion is laying the foundation for a highly profitable financial services arm down the road, and it's a huge part of the long-term investment thesis here. Okay, so let's bring this all together and look at the bottom line and what management is signaling for the rest of the year. Let's talk about the bottom line. This quarter, Grab hit a massive milestone. Its first ever quarterly net profit, $20 million. Now that's a huge swing from the nearly $90 million loss they had just a year ago. And it's a crystal clear signal that this company is now on a sustainable path to profitability. And when you break down the numbers by segment, the story gets even clearer. The core mobility and deliveries businesses are absolute cash-generating machines. And that cash is being smartly reinvested to fuel the rapid growth of their high-potential financial services business. It's a disciplined and, frankly, very smart capital allocation strategy. Looking ahead, management is just radiating confidence. They've reiterated their full-year guidance, and they're even hinting that the second half of the year could be even stronger than the first. To me, that's a clear sign that they believe this momentum is absolutely sustainable. So, after all that, what's the key takeaway from all this data for an investor? The bottom line for investors is this. The whole narrative around Grab has fundamentally shifted. This isn't just a growth story anymore. It's a story of accelerating, profitable growth. And with those high-margin advertising and financial services businesses just getting started, you've got clear catalysts for future margin expansion right there. And that really brings us to the billion-dollar question every investor should be asking themselves right now. With its flywheel spinning faster and these new profit engines firing on all cylinders, is Grab's current valuation even close to reflecting its massive long-term potential?